Hi, this is Stan Reinford, and welcome to this week's market update for Wednesday, March 11th. Thank you again for all the great compliments and also the great conversation. So let's jump into it because we have a lot of news to cover. So, first things first, the candlesticks. A green candlestick means that rates could be better or went sideways. A red candlestick means rates could get worse or go sideways. Right now, today, if you look at the charts, and again, remember, the higher we are in this chart, rates are lower. The lower we are in this chart, rates are higher. Today, we have gone a little bit higher. The box is up at the top here. To the left, we have the 30-year Treasury. To the center, we have the 10-year Treasury. And to the right, we have the S&P 500. So let's kind of jump into this. It's been about 2 weeks now since Operation Epic Fury was launched as a joint effort between Israel and the United States. Some good news that came out is that the G7 countries and the international energy agencies are proposing to release approximately 300 million barrels of oil from the reserves, which could alleviate the pain for about 2 weeks. That way, getting us, a little bit further along here to try to get a little bit better. In my research, I've seen that these situations last about 3 weeks. So again, if we can get in past that, what I believe that they're thinking is that oil could be coming down, everything could be coming under control. So we'll have to wait and see. Then initially there was a false story that came out that said that the Iranians were mining the Strait of Hormuz, which came out as being false. There was also another article that came out that said oil could hit $200 a barrel, causing oil prices to rise and hence mortgage rates to follow. I did some research on this, and according to WTI, West Texas Intermediate, crude oil peaked approximately $147 in July of 2008, and to date we've seen oil capping out at somewhere around $120 a barrel, plus or minus. Remember, when oil prices rise, there's a cost. There could be a cause of inflation and a fear of inflation. That's what makes mortgage rates rise also to go with it. So right now, the ships that are going through the Strait of Hormuz are up to about 30 ships, far greater than the standstill that we had last week. So that's good news. In the meantime, though, keep in mind that we could be a little bit rocky everywhere in the stock market, oil, mortgage rates, and things like that. So let's talk jobs numbers. The end of last week, which really didn't see any improvement in the market, but the February jobs report came out and showed 92,000 less jobs and also negative revisions. Is a clear sign that the labor market has been softening since early 2025. Let's talk housing. So right now, according to statistics, housing prices are rising about 3% a year. Again, that is not national. That is a national number. It is not a local number. Here in Pennsylvania and New Jersey, we have areas that are leveling out. We have other areas that are where it's a seller's market where people are paying a little bit more and values are rising. And then we have other areas where it is a buyer's market, so values are softening a little bit. So look in your own local area. Don't always look at those numbers, but overall values and appreciation are rising. First-time home buyers are actually on the rise and cash deals are decreasing. Let's talk about news for the rest of the week. Thursday, we have housing starts and jobless claims. And then Friday, we have the Fed's favorite report, which is PCE. And then we also have the JOLTS report. Again, as I'm showing you here, temporarily interest rates are rising a little bit. We're higher than where we've been in several months. But again, that could very well turn around and go back very, very quickly, as I've seen and looked up historically. So hang in there. In the meantime, just remember that I can help whether you are buying a primary residence, second home, or investment, whether you are refinancing, debt consolidation, doing renovation loans. I do it all. If there is a circumstance or a situation that you have, please give me a call. Let's run it by. If we have not yet, and you're one of my clients, or even if you're not one of my clients, if you have not looked at what your strike savings could be on a refinance, to see what that number would be to get you to jump in. Because remember, in the bottom of my report that I'm sending out, there's going to be a chart there which shows the refinance opportunities. If you look at those highlighted areas, they are very, very short, sometimes a day or two, sometimes 3 or 4. You've got to be ready. You don't want to wait till rates go low because then it might be too late. Have a great week, and please forward and share.